China unveiling a series of measures to boost domestic spending after recent data showed the economy is losing steam. And a slowdown in consumer spending on goods was a key finding in a new survey out from the latest China Beige book, which showed further weakness in nearly every major sector of the Chinese economy. Here to break this all down and more, Shehzad Qazi, China Beige Book International Managing Director. Shehzad, thank you so much for joining us. So I have some of your data in front of me. What would you say is kind of the top three things, big picture things that came out of this?
Yeah, I think the top three, number one is that there was much hope that perhaps you would see a consumer spending revival and perhaps get sustainable rally over the summer. And that's just not playing out anymore. You're seeing certain revenge spending baskets like travel and dining out continuing to run strong. That's great news. But simultaneously, you're seeing consumers pull back on the retail goods sides, luxury goods, autos, that sort of thing. So first of all, you've got a bit of a sputtering going on there. Number two, I would say, is that the property market recovery just remains incredibly choppy. And number three, I would say, is that stimulus prospects on the fiscal side showing some pickup in activity. Monetary side, I would say TBD.
Is more necessary, do you think?
More is certainly going to be necessary for Beijing to hit its 5% target. On the monetary easing side, now we've seen quite a bit of easing happening all year round. The real problem that we're running into is companies are just simply not interested in ramping up borrowing like they used to 3-4 years ago.
I want to ask you, what is that signal? What does that mean for us here in the U.S. in terms of this slowdown in consumer spending? We aren't seeing yet those kind of patterns to that degree here.
You know, I think when you look at the U.S. export orders component of the China Beige Book numbers, you see that they're more or less in contraction territory or near it. That tells you that we already have significant amount of demand slowdown has already taken place, and it is already starting to affect Chinese manufacturing in the Chinese factory sectors.
Shehzad, there's been some comparisons. There was a piece in the Journal today making comparison of China to Japan, and China could be the next Japan just in terms of these deflationary pressures that we're seeing, stagnant growth. Do you think that's the right comparison?
I think there's a lot of overplaying of just how much of long-term deflation threat there is to the Chinese economy. We're certainly seeing month-over-month price slowdown, year-over-year, not necessarily, consecutively. But more importantly, I think, the Japan question ultimately was putting aside the deflation issues. Japan became rich as a country before anything else happened. China is not a wealthy country. So China's challenges are actually broader and deeper in some ways than Japan's.
Is there more stimulus? Like, I know we've kind of talked about this topic, but is that really on the table? And should it be something that needs to be latched onto?
Markets need to be very realistic about stimulus prospects for 2023. And stimulus is going to be very narrow and it's going to be very target. That big bazooka being fired at the economy, the way we saw it post global financial crisis, great financial crisis, that's not going to be happening. Policymakers also need to think about next year and perhaps hanging on to some dry powder for stimulating growth in 2024 and beyond.
And just that you briefly mentioned what we're seeing just in terms of property over there, commercial real estate, the weakness continuing in China. When we talk about that recovery, the timeline of that, what do you think is the realistic expectation?
Property will definitely never go back to being the growth driver that it used to be in terms of reaching a much more respectable level of growth. Several years, I would say several years, a lot of choppiness ahead, a lot of good, 2 steps forward, 1 step back type of scenario that investors should be preparing for.
And I want to ask you, I want to go back to what you talked about with regard to the consumer. We know here the consumer is often considered the backbone of the economy. We just prop up what happens here. How much of the economic picture does the consumer make up in China?
Look, in theory, China, the bulk of the GDP comes from consumption. But that's not actually really true. That's a bit of a misnomer. China has not yet transitioned to being a consumer-driven economy. They want to get there. So I would say that, needing good retail sales and consumption numbers is important to the economy, but this is still driven by and large by the industrial sector. And therefore, those headwinds building up in manufacturing and the slowdown in the construction sector, those are still vital to get a grip on.
All right. Shehzad Qazi, thank you so much. China Beige Book International Managing Director, we appreciate you.